How's it going, YouTube? Welcome back to another video with the House Money Investing channel. Today's video, I'll just be going over a few stock picks I got that I added to the watch list, as well as looking at some dividends, maybe some stock news and some stock gains. So jumping right into it here, this is on my Robinhood account, and these will be some dividends that I received on the 23rd of December. And the biggest dividend I received was DTD for 19 cents. Now, DTD is a U.S. total dividend fund from Wisdom Tree, which I'm up 7% currently on my position here in Robinhood. And this is a dividend payer of 2.73%. Then we have Stash account. I received some dividends on the 23rd as well. And the biggest dividend payer was a ETF called Women Who Lead. You will have to have Stash in order to get into this play. I do not know the ticker for this particular ETF. I could just look it up and tell you guys, but I don't feel like logging into my account and scrolling down and trying to find it and all that. Then we have a stock pick for today. This is a play for Dick's Sporting Goods, DKS, which is a retailer store. It did pretty good last week, up 3%. Dick's does pay a dividend of 2.19%, almost a $5 billion market cap. And this thing's still going to run up about another 15% in my opinion. And Dick's Sporting Goods, they team with Instacart for same-day delivery at 150 stores. You know, they were aiming toward that last-minute holiday rush. 25 analysts have this as a 52% of those 25 analysts have it as a hold. And basically, Dick's Sporting Goods, their sales, they skyrocketed during the pandemic. You know, they forecast that e-commerce will reach 30% of its sales this year, up from last year, which was only 16%. And hopefully they're hoping to approach 40% of sales by the end of the decade. Dick's is the largest pure sporting goods chain in the U.S. They have good relationships with athletic and outdoor vendors, allowing for marketing support and access to some differentiated product. Their EPS, of course, quarter 2 and 3 did very well. They beat expected EPS, and it grew double, triple of the first quarter EPS. Dick's Sporting Goods, it engages in the retail of extensive assortment of athletic sports equipment, apparel, footwear, and accessories through a blend of associates, in-store services, and unique specialty in shops. If you've never been to Dick's Sporting Goods, they sell weaponry, all kinds of sports gears for several different sports like football, basketball, golf, tennis, etc., etc. Me personally, I do shop at Dick's every now and again. They are kind of up there in price. They do have sales, but you know, I buy mostly like Nike gear, but I just happen to find it cheaper at, you know, like Nike Outlet and stuff like that. But you know, a lot of people do shop at Dick's. They have a good name. It's well known. So this is a play that I see growing here in the next month or two. So I'm going to swing trade Dick's and try to, you know, get some fractional shares up out of it. The second pick we have is a JP Morgan ETF. This is a fund. It's U.S. minimum volatility ETF. This doesn't fluctuate much at all, but it does pay a dividend of 2.90%, $17 million market cap. So this is somewhere safe to put your money, sort of like a savings account with a nice interest of 2 to 3%, which kills any regular savings account, and it also beats out high yield savings accounts. Basically, this is a lower volatility U.S. large cap stocks from the Russell 1000 index. And so it's not just gonna fluctuate. Of course, minimum volatility. I mean, it's in the title, and like I said, it does pay that nice dividend of 2 to 3%. So we're somewhere you can hold your money, kind of like a savings account, and collect some good interest on it. So this is a play I'm gonna get into. Hopefully, I can swing trade and gain some fractional shares of this one as well, and start building my position. Then we got Twitter. This is a stock that I own in several different brokerages. I put it back on the watch list today for the swing trades of this month. I'm currently up 16.6% on Robinhood. I got in around $46, 46.44. Twitter has a $42 billion market cap, and it still has about a 5% growth run up in it. And they have been in talks with Square. Square is looking to buy Twitter, so we'll see how that goes. 41 different analysts. 66% of these analysts have it as a hold. For their product enhancements, video content could return the monthly active user growth rate to double digits. So them adding video content to Twitter, this was article was published in early December. So an analyst thinks that it's going to grow, basically the growth rate of the app. Agreements with the various professional sports leagues provide a platform for interaction and conversation about the games, which attract more premium content providers to use Twitter's platform. Growth in ad revenue per user remains strong at Twitter, more than offsetting the deceleration in user growth. Their last quarter EPS was great, and this is kind of a play into the software sector. I bought this back in October, and like I said, I'm up over 16%. Twitter is a global platform for public self-expression and conversation in real time. It provides a network that connects users to people, information, ideas, opinions, and news. The company's services include live commentary, live connections, and live conversations. Its application provides social networking services and microblogging services through media devices and the internet. The company can also be used as a marketing tool for businesses. Its products and services include Twitter, Periscope, promoted tweets, promoted accounts, and promoted trends. Twitter was founded by Jack Dorsey. So I'm sure everybody knows about Twitter. It's basically a social media platform, that you can talk to anybody on. Basically, you can, connect with celebrities and anything like that. Of course, the former president was always on Twitter, so Twitter is a very famous platform. I see this thing going up in value, so it is something I want to add. I want to gain more fractional shares or whole shares of this company, so I will be swing trading as well. Then we got BEEM, Beam Global. Last week they were up a whopping 42.46%. So a great week last week. $388 million market cap. It's around the all-time highs. In the previous year, this thing's ran up from $6 to $56. And this is a California-based company. It engages in the invention, design, engineering, manufacturing, and sale of solar power products. It offers solar-powered products and proprietary technology solutions for electric vehicle charging infrastructure, out-of-home advertisement platforms, and energy and security and disaster preparedness. The company was founded in 2006. So this will give you play into solar power, electric vehicle charging, which is a great thing to invest in with all the new EVs coming out. They're going to have to have somewhere to charge them. Of course, solar power has been a catchy trend, lowering energy costs. So definitely something that's going to continue to grow as it has grown over the past year. This is a fairly new company. IPO'd last year in April, and it's done nothing but good things and it's running up. So I'm not really trying to chase it, but I am trying to jump in and not really just miss the whole train. I want to, catch a little bit of it, swing trade it, hopefully build my position in it, and go from there. Then we got good old LCA. This company I have been watching. I haven't bought into yet. It's a SPAC. It's merging with it's gonna be like an online gambling SPAC. And I've been watching this thing. I haven't gotten into it. I want to let that hype die down, and it has just ran up massively. Over the past year, it's up 161%. And this thing actually, this blank check company actually started out in June of last year. But the online gambling sector is a big hit. You got DraftKings and others. So, it's got a $1 billion market cap. It came all the way from $8 up to $26. So now is my time to jump in and, ride this thing out, since by now, the hype has died down and it's going to actually start showing its true colors, which, there's so many SPACs and IPOs that come out. I don't buy them all. There's certain SPACs that I'll keep an eye on, like LCA was one that I kept an eye on. RGM, I believe that is RPG. I'm sorry, RPG, LCA, SPACs like that I kept an eye on. Some like NNDM and others I did get into, but some I just keep an eye on, and then when I feel the time is right, that's when I'll jump in and try to swing trade it and build my position in it. Next, we got GDX. I've been hearing a lot of bullish sentiments when it comes to gold. This is a gold miners ETF. This is something I've swing traded before, and it's something that I own as well. It's been down over the past week. It does pay 0.5% of a dividend, 0.54%, $16 billion market cap. It's been beaten down, so I know at these prices I can still get in at a good deal and catch, about a 20-25% run up when gold does come back. Basically, it tracks a market cap weighted index of global mining firms. I'm always into precious metals, silver, platinum, gold, owning silver, physical silver, platinum, and gold, as well as getting into gold stocks like GLD and then gold miner ETFs and stuff like that. Gold ETFs, you got SLV, you got all that glitters on Stash. So definitely a play I'm gonna get into, even against the bullish sentiment. It might run down some more, but I know at the end of the day it's gonna pick back up, and I will make money holding gold. So it's something I'm gonna continue to swing trade. Then we got AT&T. This is something I own in several different brokerages. I just bought some more AT&T like yesterday or day before yesterday. It's a great dividend payer. Everybody pretty much knows about AT&T, and yeah, I just added it back to the watch list so I can build my position. I'm currently down 7.80% on the position that I have in my Robinhood account, but it is a good dividend payer. So over 7% dividend yield, over $200 billion market cap. This thing probably still has about 30% upside into it. It's been really beaten down, and a lot of analysts, they're still bullish on AT&T despite the leverage and dividend concerns. Looking at 27 analyst ratings, we got a 59% hold and a 30% buy. Warner Media holds a broad array of content rights and has a strong reputation with content creators. Within the wireless business, AT&T holds the scale needed to remain a strong competitor over the long term. Sprint and T-Mobile face a long road as they attempt to merge despite network and cultures. AT&T has pulled together assets no other medium or telecom company can match. This firm has direct contact with more than 170 million customers across various products, providing an opportunity to build deeper relationships that drive increased revenue and loyalty. The EPS has been beating out expected EPS. It has been on a downward trend, but they're still beating their expected EPS. AT&T engages in the provision of telecommunications, media, and technology services. It operates through the following segments: communications, which is Warner Media Latin America. The communication segment provides service to business and consumers located in the U.S. or in U.S. territories and businesses globally. The Warner Media segment develops, produces, and distributes feature films, television, gaming, and other content over various and physical digital platforms. The Latin America segment provides entertainment and wireless services outside the U.S. I am a truck driver by trade, and I can say without a shadow of a doubt, AT&T, Verizon have the best cellular service out of any carrier. I currently have Sprint and T-Mobile, and it is garbage. I've had Metro PCS, it was garbage. Just know from experience and talking to other drivers, AT&T and Verizon are the way to go. I've had Verizon in the past, always worked great, and I've used AT&T Spectrum and stuff like that in the past as well, and they have a nice 5G network, and so does Verizon. 5G is a big player coming up. It's building out. Once it takes over, it's going to take over. So AT&T gives you 5G play, a nice dividend play, plus their service is phenomenal. And like I said, they have 170 million users, so most of the users are loyal to AT&T because of the service that they provide. So this is something I'm going to continue to swing trade as well, and try to ride those games up as well as get those dividends. Then we have PSTH. This is a SPAC company. I have swing traded it. I do own some of it. $5 billion market cap, and it's close to the all-time highs. Maybe I see about 5 more percent. Upside on this SPAC. I'm gonna get in and swing trade some more. I'm waiting on that merge. So once they get that merger ran through, then I should see some nice gains in this. So definitely something I added right back to the watch list. Then we got US Foods. This is a new play for me. I am familiar with the company, being a truck driver. I deliver products to their facilities, and I see their day cab drivers on the road all the time. US Foods has over a $7 billion market cap, and probably I see about a 30% growth in this company. 11 analysts, 73% of them got it as a buy. US Food benefits from circular tailwinds, such as Americans' tendency to consume more food outside the home and industrial share shifts to independent restaurants. Continued acquisitions could modestly enhance US Food's scale, and the addition of its e-commerce platform should help increase share of wallet and loyalty with acquired firm customers. The firm has improved profitability since 2014, increasing operation margins from 2% to 3.2%, and ROIC, including goodwill, from 6.1% to 7.3%. And we expect these metrics to continue to improve long term, reaching 3.3% and 8.6%. So revenue is on the way up. EPS Q2, they beat the EPS in Q3. The EPS is gonna jump. It did jump from Q2 to 3. This is a play in consumer services, retail, and restaurants. A company based out of Illinois. It operates as a food service distributor. Its products include frozen and dry food and non-food products to food service customers throughout the USA. The company offers services under brands Chefline, Glenview Farms, Cattleman Selection, Cross Valley Farms, Harbor Banks, Hilltop Hurt, Devonshire, and Metro Deli. US Foods is is one of the major distributors of a lot of products. They go to your favorite stores like Walmart, Target, Whole Foods, etc. So definitely a company that's been making money, going to continue to make money. So I want to build a position in U.S. Foods. So I just got in it for the swing trade. Then we have FLIR, which this company last week was up almost 8%. They do pay a dividend yield of 1.64, over a $5 billion market cap, and probably I'd say about 40% growth potential for this company as well. And that's going to be on the high side for the 40%. More realistic, maybe 15-20%. But either way, I see growth here. 10 analysts got as a 60% buy rating. They've been killing the EPS second and third quarter of this year. This is an Oregon company. Sectors related are hardware and industrials. They develop technologies which enhance perception and awareness. It design, develop, market, and distribute solutions that detect people, objects, and substances that may not be perceived by human senses and improve the way people interact with the world around them. The company operates through the following segments: Industrial Business Unit, Government and Defense Business, and Commercial Business Unit. The Industrial Business Unit segment develops and manufactures thermal and visible spectrum imaging camera cords and components that are utilized by third-party countries to create thermal, industrial, and other type of imaging systems. The Government and Defense Business Unit segment develops and manufactures enhanced imaging and recognition solutions for a variety of military, law enforcement, public safety, and other government customers around the world for the protection of the borders, troops, and public welfare. The Commercial Business Unit segment develops and manufactures cameras, video recording systems, video management systems for use in commercial and critical infrastructure, electronics, and imaging instruments for recreational and commercial maritime market. Intelligent traffic monitoring and signal control systems, and handheld and weapon-mounted thermal imagery systems for use of a variety of applications. So I do a little bit of everything for defense. The main thing is like thermal vision and stuff like that. So with them working with the government, I see a growth in this company. It's up 60% over the last 5 years. It's a steady, slow growth. So I steady see it growing. It was up like 88%. It was around $53. The pandemic shot it down to 25, and it's slowly climbing back up. So I want to catch that wave back up, to around about $62 or so per share. It's currently at 45. So definitely I'm a swing trade in. Then we have another one I added right back to my watch list. I just traded this one the other day. Bought some shares of it. This is Planner Technologies. It's a SPAC. I do own some in Robinhood. It's currently down 1.57%. This company has a $48 billion market cap and has about a 20% upside. They got a contract with the UK's NHS that could be valued over $31 million. Their EPS earnings wasn't good. It's probably why it's beat down. It's a software business out of Colorado. It operates as a holding company which engages in developments of data integration and software solutions. It operates through the commercial and government segments. The commercial segment offers services to clients in the private sector. The government section provides solutions to the United States federal government and non-U.S. governments. It offers automotive, financial compliance, legal intelligence, mergers and acquisitions of solutions. Its products includes Planner Gotham and Planner Foundry. This company was founded in 2003. So definitely a play I'm getting to with the software and everything like that, and the new contract. Like I said, I own this in several different brokerages. Some I'm up on, some I'm down on, but it's something I'm going to continue to swing trade. Then we have Iron Mountain, IRM. This is something I just bought, I believe, yesterday. This is something I already own, something I continue to swing trade. It's a nice dividend payer. over 8% dividend, over $8 billion market cap. This thing still has room to grow, about maybe 20%. 7 analysts have it as a 71% buy rating. The integration of Recall and Iron Mountain, the transformation incentive, and further maturation of certain emerging markets should drive additional revenue and margin expansion over the medium term. Iron Mountain operates a highly durable business model with consistent cash flows and new opportunities in areas like data centers, and provide a way more attractive growth runway. This firm boasts an attractive dividend yield relative to other REITs. EPS has been killing it. It's a business out of Massachusetts. It engages in the provision of storage and information management solution. It operates through the following business segments: North American Records and Information Management Business, North America Data Management Business, Western European businesses, other international businesses, global data center businesses, and corporate and other businesses. The North American Records and Information Management business segment offers record management, destruction, and fulfillment services throughout U.S. and Canada. The North American Data Management Businesses segment handles data protection and recovery, server and computer backup services, and safeguarding of electronic and physical media in the U.S. and Canada. The Western European Business segment offers recording management, data protection and recording services, and document management solutions throughout the United Kingdom, Israel, Australia, Belgium, France, Germany, Netherlands, Spain, and Switzerland. The other international business segments offer storage and information management services throughout the remaining European countries, Latin America, Middle East, and Africa. The global data center business segment provides the data center facilities to protect mission critical assets and ensure the continued operation of its customers' IT infrastructures with secure and reliable collections and wholesale options. The corporate and other business segments consist of storage, safeguarding electronic or physical deliveries of physical media of all types, and digital content, respiratory systems to house distribution and archive media of company assets, primarily for entertainment and media industrial clients. So basically, they do like like software, hardware backup systems and stuff like that to protect people's data and IT systems. So kind of like in the cybersecurity realm. But Iron Mountain is something I like and something I'm going to continue to swing trade as well. Then we have a new play here, SoftBank, SFTBY. This is something I was looking at earlier. It's beaten down last week. PE ratios of 29, $140 billion market cap, and probably about 10% upside. It says software bank billionaire puts a new spin on SPAC mania. SoftBank to file for first SPAC IPO today, seeking to raise up $600 million. 92% buy rating from 13 different analysts. So they're about to start up a new IPO. So this is something I want to get in. It operates as a holding company which engages in the management of its group companies. It operates through the following segments: SoftBank Vision Fund, SoftBank Arm, Brightstar, and others. The SoftBank Vision segment engages in the investment businesses. The SoftBank sector provides mobile communication, broadband, and telecom services in Japan. The Arm segment designs microprocessors and develops software technologies. The Brightstar segment engages in the distribution of mobile devices overseas. The other segments include smartphone payment businesses, alternative investment businesses, fund businesses in Latin America, and the operation of the baseball team. So they're pretty much well diverse. And with the IPO coming out and the other things they got going on, it looks like a good play, in my opinion. So something I'm gonna swing trade, try to build a position in. Then we got good old RTX, Raytheon Technologies, something I already own. I'm gonna go ahead and swing trade it again. In my Robinhood account, I am up 7.74% on this position. They pay a pretty decent dividend of a little over 3%. Market cap is over 100 billion, and this thing has a lot of upside, guys. It's $23 off its 52-week high. So definitely something I see running back up. Over the past month, it's been beaten down. So we'll see what happens with this one. It says DOT reassessing SpaceX satellite contract, AIM Raytheon protest. A new Airbus plane, what could it mean for Boeing, Raytheon, and GE? 20 analysts, 75% got it as a buy rating. Their A320 family and A220 aircraft should be substantially increased the company's installed base of engines, which would unlock decades of high-margin servicing. They have a missile defense segment that is prioritized by the National Defense Strategy, which could lead to consistent growth. Raytheon is well balanced between commercial aerospace and defense, which would particularly insulate and combine firm from a downturn in their other segments. Great EPS. This is industrial play. I've been swing trading this thing since August, and I always pretty much gain something on it to add to my position. Raytheon engages in the provision of aerospace and defense systems and services for commercial, military, and government customers. It operates through the following segments: Collins Aerospace Systems, Pratt & Whitney, Raytheon Intelligence and Space, and Raytheon Missiles and Defense. The Collins Aerospace Systems segment specializes in the aero structures, avionics, interiors, mechanical systems, missile systems, and power controls. The Pratt & Whitney segment includes design and manufacture of aircraft engines and auxiliary power systems for commercial, military, and business aircraft. The Raytheon Intelligence and Space segment involves in the development of sensors, training, and cyber and software solutions. Raytheon Missiles and Defense segment offers end-to-end solutions to detect, track, and engage threats. So, it's kind of in the aerospace. They do planes, engines, missiles. They kind of do it all for the government and commercial businesses. So, definitely something that's going to grow. Then we got some dividends here from my Robinhood account. These were paid out Christmas Eve and Christmas Day. And the biggest gainer being DTD, once again, which is that total dividend fund. Let me see if that's the one I posted earlier. DTD. Yeah, it was pending. Okay, so it was pending on the 23rd, and it actually just went through here today. Which, like I told you guys, that's a U.S. total dividend fund from Wisdom Tree. That's going to be it for the video. I will go ahead and make about 10 to 11 purchases to add to my portfolio to swing trade for the month. So I will post that video next. If you like the content, please hit the like button, subscribe, hit the bell to follow my journey. Keep these daily updates on my stock picks, stock news, my daily gains, as well as everything I buy, sell, trade, deposits, withdrawals out of the brokerages, and you can kind of see, what kind of companies I'm into, why I'm bullish, why I'm bearish. You can also check out my investing strategy that I use, that I call house money, which is basically deploying principal into the market, pulling out the principal, leaving gains in the market, hence free stocks, zero risk investment. Been doing it since June. I've accumulated over $12,500 plus of free stocks that are at no risk to me to leave into the market for decades. That'll be it, guys. I'll catch you in the next one.